Welcome to the Capital Spreads Weekly Update. Today is Thursday, the 24th of June 2010. So not a great start to the week. So far we've seen equity prices come off quite a bit, indices around the globe just starting to get a little bit nervous about the overall global economy. We've had some relatively weak housing data from the US throughout this week so far, and rather bearish comments from the Federal Reserve in the US. Their FOMC meeting last night did indicate that there are still underlying risks to the economy and deflationary risks as well. So we've seen a little bit of a sell-off so far, and we're down some 3% on the week for the FTSE. We also saw the budget earlier this week in the UK, a huge austerity package for the UK, vast and deep public spending cuts, and really George Osborne, the new Chancellor of the Exchequer, is gambling very much on a pretty decent recovery by the private sector. So a little bit of concern there. These austerity packages being implemented throughout Europe as well in order to tackle budget deficits. So there's a little bit of concern, and we've seen earlier in this week the Bank of England minutes, a hawkish vote from one of the members there wanting to raise interest rates to tackle increasing inflation. But overall there's an interesting battle between the deflation and inflation camp, but we'll focus on that for the theme of the week. So a poor start, but where do we currently stand? Well, the FTSE's around 5140, the Dow around 10230, and in the currency markets actually been relatively strong performance for the likes of sterling and the euro. They've actually really benefited more than anything else from a weakening dollar as concerns over the global economy continues. So euro is around 122.70, and cable, which actually touched the 150 mark, is just below there now, around 149.60. Gold as well, that suffered a little bit as the risk appetite just seems to be dwindling somewhat. That's fallen from its highs as around 12.33. So really the question on investors' minds is, has this recent rally from the lows been a bit of a dead cat bounce? So what are clients doing? How are they playing things? Well, they're very much long the indices. They bought into the recent weakness so far. They're very long the FTSE in particular. They're also long the S&P, so expecting prices to retest their highs after a few days of weakness. On the currency front, they're very much short and opposing the recent strength in the euro. So just on side at the moment, as the euro is a little bit weaker this morning. So clients very much feeling that the euro's bounce is going to be short-lived, and we could return to the area around below the 1.2 level. They're long gold and they're long oil. So for the remainder of this week, we've only really got one thing to focus on, and that's data from the US tomorrow. University of Michigan confidence numbers, which are expected to come in about in line. No fireworks expected there. So it could be a quiet end to the week, which has been dominated by, more than anything else, the World Cup, of course, and so volumes have been relatively thin. So the theme of this week, very much the debate now in the marketplace is between the inflation camp and the deflation camp. Obviously, weakening currencies across Europe has kept inflation high in the Eurozone. Certainly in the UK that is definitely the case, but there are concerns, and certainly George Soros has been yesterday a pretty direct attack on Germany and mentioned there are serious concerns over deflation. So there's still a lot of people who are worried that the austerity packages across Europe will take hold and they will cause inflation to plummet and long-term damage could be done. So that's where we are at the moment. But it's interesting to note that obviously there is still quite a lot of people in favour of inflation remaining high. So there's an interesting argument. We'll have to see how that pans out over the coming weeks. But as ever, that's it for this week. Please do give us feedback on the email on the screen.